Yes, I know market is crashing right now. Everyone is very fearful, and many investors are now searching for answers. Asking questions like, "What should I do right now?" Okay, with this market, okay, it's all crashing down. So I decided to make a video for you guys, and I will review my action plan, profit from this market crash. So let's get started. And in case, okay, you all came across to this video first, right? Please make sure to go to my first video here, the part 1 first, okay, and on my 5 secrets on profiting big when the market crashes. Because this video here, I laid out a very solid foundation, okay, knowledge and understanding here for new stock investors, okay, on how to handle this market crash. Because without further understanding this here, okay, the mindset and the behavior that you need to adopt, okay, as a stock investor, you won't really appreciate, okay, or understand my action plan here that I will lay out to you on in this video, okay. So you may pause this video here, go to the first part and watch first, then only you come to the second part, okay. So my strategy for 2025 right now. And before that, let me share with you, in my community, right, and 2022, if you all remember, is the market crash, okay, the big, okay, 2022 market crash, right? In 2022 and 2023 at that time, okay, we decided to tell our members, okay, our strategy is to recover the portfolio. Okay, and then true enough, in 2022 and 2023, a lot of them recovered their portfolio and they start to break even. And then if you all still remember, okay, after that in 2024, the market really bull along the way. Okay, for the one whole year, all market all went up, right? So at that time, okay, we told our members this is the time to profit and get a lot of capital. Okay, and right now in 2025, we told our members, okay, hey, okay, we there's a market correction, but it seems that now it became a market crash already. Okay, everyone is very big fear. So we decided to tell you guys, hey, this is the time right now to build massive wealth already. Yeah. So in 2022 and 2024, right, our goal of recurring portfolio and get more capital here, okay, is already achieved. Okay, because we targeted all of these stocks here: Palantir, CrowdStrike, Shopify, ServiceNow, and even C Limited. Okay, these are some of the stocks, okay, the star stocks in our community that help give results for our member. So right now in 2025, market has crashed already. What are the next stocks that we are targeting? Okay, where we will decided to build next level wealth already. Okay, so this is the part, okay, where I will help you guys, okay, on how to profit from this market crash right now. Yeah, so let's get started. As usual, I think it's worth repeating, all right, that especially when it comes to market crash, right, the only issue is always price going down. Okay, no one is asking, which stocks is the good one, and how what should we do with it. Normally, people always know how to buy good stocks already. Right? The only issue always comes is when price going down. So the first thing is, you need to accept when you are a stock investor, volatility is a feature of the stock market. You must accept that. Yeah. So volatility is a feature. It's definitely not a risk. Okay. You must accept that. Because if you want to take advantage of the stock market, right, volatility creates opportunities for investors who know how to take advantage of it. Okay. You want to be a contrary investor? Okay. You need to view it this way. Okay. Throughout your stock investing journey, right, you must accept there will always be many, many reasons to sell, especially right now when there are so many news, okay, and media, you can just read it at the palm of your hand, right? Very simple. You will be bombarded with negative news, very fearful news, on what to sell. So this chart here, okay, is a very clear evidence that there will always be reasons for you to sell. Okay, like for example, in 2018, the big one in the trade war, right? Okay, and then in 2020, fastest bear market, COVID-19 and stuff. Okay, you at that time, if you all still remember, okay, it's like the world is ending already, the world stopped and stuff, right? Okay, wow, the whole world it's like it's ending already. My companies will go bankrupt, it won't grow anymore. This kind of fear. But then at the end of the day, if you still pick the good companies, you will still make money after that. Okay, the market continues to go up nonetheless. Yeah. So right now, the latest reason to sell are the tariffs. Okay, so remember that. So the next thing is you need to understand in stock market, volatility, like I said, is a feature. You cannot expect, okay, stock price will just continue to go up smoothly for you without drama, okay, and then simple, just buy, it will go up for you. No, reality is like this. It will up and down because of the short-term volatility. Okay, now, so volatility again is something a stock investor must accept and understand. Big volatility is like a cost of admission for big market returns. And you must accept you want big profits in the stock market. It's not easy at all. It will never come for free. Okay. And you have to definitely pay the price. And the price, okay, for big returns in the stock market is volatility. Okay. So it's how you take advantage of it. Okay. Now, the next thing, the mantra every time when stock market drops, right, is this famous quote will come out: be greedy when others are fearful. You will hear this many times, okay, by this famous investor here called Warren Buffett. Yeah. But the question is this: every investor know this quote. You watching my video here, you will also know this quote. But let me tell you, a lot of the investors, especially I saw in 2022, they cannot follow this mantra. They cannot at all. Okay, because you see, this is what happens in real life investing. Now, when it start, okay, market drops, right? The price drop 10 to 30% drop, right? Wow, okay, the first investor haven't even buy one, right? Wow, they be greedy. They saw this quote, be greedy when the market is fearful. Wow, the price now is undervalued. The company is very, very good. They are excited. This is the feeling. Okay, they buy. Okay, but let me tell you, this is how real thing happens. The moment they buy, right? Okay, people normally they will have a, I don't know how, is that they have a very false expectation that the moment they buy, the price will go up for them already. Okay, but they forget the fact that you are buying a dropping I say a dropping stock, okay, a stock price, right? So sometimes it will keep on dropping, but we will never know. All right, so 30% is often the breaking point. So whenever they buy, okay, they thought that, oh, another drop, another 5-10%, they are okay with it. They are okay with it. Maybe drop another 30% more. They are quite okay. But the funny thing is this: the moment it hits past the original purchase price and they continue drop further 30%, in my experience, mostly this is the breaking point for all stock investors. I'm sorry, not to say all, majority. Okay, so the funny thing is you must understand the market like to test your limits. Right? Okay, they know which is your limit: 30%, 40%, 50%. They will keep on hitting your limit and then push past them. They will push past them one. Okay, so the moment they drop below the 30% of your price, right, the cost price, right, very funny. These people who thought they were greedy one, they will become the fearful, and then they will sell to the another greedy people. So this is how, okay, it works in when during market crash. That's why the mantra, okay, be greedy when market is fearful, okay, is very difficult, okay, to follow. Because the greedy at the end, you are the one become the fearful for the other people who are greedy. Okay, so this is a very clear example. Okay, like for example, this stock here, very good stock. Wow, they saw, oh, market start to drop, 30%, wow, it's a big drop. Okay, I buy. Okay, then the price continue to drop further. Hey, good. Okay, I average down. You all hear this mantra, right? Keep on average down, keep on DCA. The funny thing is this, the moment price continue to drop further down, 50%. I tell you, a lot of investors during that time, they start to sell already because they suddenly hits them. Oh, is there something wrong? Maybe the market knows something I don't know. Right? Then they hits their understanding already. Or cannot. They keep on dropping, dropping, dropping. Especially you see the price drop for 1 year like that. People cannot stand it. Right? For 1 year, keep on seeing your losses keep on increasing more and more. I tell you, it will hit the limit. Then people will say, okay, enough is enough. I should cut loss. Okay, then I enter back. Okay, when the market is good. Okay, that's when these people start to sell. But after that, the price recover back. The price recover back. Okay, so the question is, a lot of people miss out these returns here. And I think if you all been familiar, again, this chart here is CrowdStrike. Okay, this chart here is CrowdStrike. Yeah. So a lot of people, when they say, oh, I will get back when the market is bullish already. I tell you, when the market want to recover, there will be no signs on. There were no signs, there will be no warning. I tell you, hey, now is market going to recover already. This is the bottom already. Please enter back now. I tell you, no, you won't. Because when the price start to go up, right, you'll be hesitating. Okay, oh, is this the real bull market? No, maybe this is just a fake bounce only. I continue to wait more. All right. Then if you see the price continue to go up, then I tell you, let's say, for example, this CrowdStrike 100, go back to like 120, 150, right? Say, yeah, okay, now become expensive already. Okay, I wait back, it drop back, but eventually it never drop back. So that's why people, right, they try to go in and out, try to time the market, eventually they will miss out the returns. Right? Okay, so you see, the moment you sell, okay, remember this. Okay, I want you guys to reflect back yourself. Okay, when you are facing right now in this market here, the price is dropping. How are you feeling right now? What is it that in your thoughts? Okay, the moment you sell is often the point where the decline ends because many others are also reaching their breaking point. All right, if you are an average investor, your emotions likely mirror the broader market sentiment because it's not only you are selling, other people will also want to sell, right? Because if you so you need to reflect back and think, if this market keep on dropping down like that, some inner voice tells you, hey, enough lah, I should start to sell already. Remember back this quote I shared with you here. Okay, if you want to be an average investor, then by all means, okay, act like the other average investor out there. Okay, let the share price manipulate you, follow the news headlines, okay, be fearful. Okay, you say you want to be greedy when market is fearful, but then you are now become the fearful, okay, selling it for the other people who are greedy. Okay, so think that, okay, the moment you there's an inner voice telling you that you want to sell already, right? So you are the average investor outside there already. Okay, remember that. All right, remember. Right? So how to follow this mantra successfully? Okay, at that time in 2022, that time the market keep on dropping, how the BIA team and our community members are there to continue to slowly accumulate, slowly to buy and wait it out, and then be greedy throughout that 1-2 years of a bear market. Okay, so how to follow this mantra successfully? Okay, first thing is this. Okay, by Benjamin Graham here. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Now, I make it simple for you. It just means this: stock price follow fundamentals over the long term. Okay, you must understand this. So I already explained it very clearly in my first video here. If you miss out, please watch back the first video. I explained this very thoroughly. Okay, so this mantra here, the stock price follow fundamentals over the long term. You can see, especially in this chart done by Morgan Stanley, right? They say in the short term, you can see, especially in the yellow color, right? Yes, it will be affected by the multiple. That means the price to sales ratio, the PE ratio. That means how much the market is willing to pay, right? But over time, okay, as time goes by, especially like 10 years, okay, the key driver of long-term stock performance, you can see this one, 74% is what? The revenue growth. And that is the fundamental. That is the sales and profit here. You see, sales and profit. So this is the fundamentals that will drive long-term performance. Okay, so I show you one example. Okay, as shown in my first video also. For example, CrowdStrike. Throughout this period, you can see there's a lot of volatility up and down, then big drop again, this kind of thing, right? But if you take out the stock price, you look at the performance, you can see this red color here, the total revenue, okay, what? Keep on going up, very nice performing, then the revenue per share also keep on going up, right? So if you are focusing only on the short term, like the drop, definitely you will be affected. But if you did dare to zoom out, you can see actually this price is from here moving to here. So it's actually going up over the long term. Service now also the same thing. Revenue keep on going up, revenue per share going up. Throughout the short term, there's a lot of volatility going up. But if you are willing to zoom up further, you can see from here, the price go up to here. Okay? Now, Amazon also happened the same thing. Okay, I don't want to repeat. Now, so how to gain an edge? Okay, especially when market drops already. How to be greedy when market is fearful. How to be a contrarian investor. Okay, now you want to be a contrarian investor, you dare to buy more. Okay, or when the market is dropping, right? Number one, you need to understand the company. Very, very important. Okay, you need to understand, you need to follow up, and you need to know what you are doing. Okay, and then secondly is you need to know valuation. Okay, so I will explain it further. Now, why we need to understand the company, okay, better. First, if you understand, you will be confident to buy. Because the price drop, the drop is because of external factors, right? Caused by news headlines and stuff like that. But you know that your company is not affected, for example. You know that this company here, the price drop is because of market sentiment, not because the business declining. Okay, so it gives you confidence. Secondly, it helps you build conviction to hold. This is the second part that most people feel. Okay, because throughout after you buy, what happens next? You need to hold. But hold is not easy. It's easy to hold when the price going up. When going up, any Tom, Dick, and Harry can make money. But the hard part is you hold it when there's volatility, when the price is dropping. So when you understand the company, you follow up, you know your company is executing, there's really nothing wrong, but the price goes on the opposite way, right? Then you will get affected because okay, you build conviction already, and that's why you dare to hold or even dare to average more. Okay. Then thirdly is this: you will have faith that the stock price will recover sooner or later. Okay. Now next, why we need to further understand company is that it also helps you to identify what the market has misunderstood or overlooked. Okay, because sometimes price drop, right? Market may how to say, like I said, they misunderstood the company. Okay, they misunderstood. They cannot see the future growth from the company because all they read is news headlines or they just see superficial level. They see numbers only. Then they just sell it off. But if you are able to dig deep to find information that the other people are not willing to even go bother to read and dig out, right? This will give you what I call informational edge, and it will give you the confidence to act contrarian than other people. Then the next thing is you wait for it to correct its mistake. Sooner or later, the market will realize, let's say, for example, next quarter, this company performs slowly, become better and better already. Oh my God, okay, it's wrong. And then they will correct itself, the share price. And that's when you profit because you bought it at a low. And now the market push it up for you. Okay, so this is why it's important to understand the company. Next is know the valuation. Now, I can't emphasize how important this is, especially during market crash. Because if you know the valuation of a company, number one, it will protect you from overpaying. Okay, let me tell you this. When during the bull market, all stocks will go up. Some will go up so overvalued, okay, that when it drops, it's still overvalued. Do you know that? Those who do not know the valuation, they thought, oh my God, drop already so much. Wow, time to enter. Then the notion to tell you that it won't drop any further because already dropped 50%. Familiar, right? And this is where a lot of people lose money. Okay, so you need to know first, understand the company, make sure it's performing well. Then, secondly, before you enter or even decide to buy more, you must know the valuation. Yeah, it protects you from overpaying and it limits temporary losses. Because if you buy undervalued, okay, let's say the price is the valuation is here, right? You already buy undervalued already, right? At least you know you are already buying at the low. With valuation, there's some comparison. Then you know you are buying at the low already, and it gives you some form of the word is again is called margin of safety already. You know that you are not buying at a high, right? So high valuation, you must understand high valuation supported by hype, okay, and positive sentiment. So if you buy this kind of high valuation companies, right? Okay, you please understand this price here is all pushed up by hype and positive sentiment. It's like air only, air supporting the share price. When it crashes down, it will crash a lot. Okay, so you don't want that. So for example, clear example is Hatalega. Now, Hatalega at that time, you all still remember during the COVID time, wow, go up until 20, right? The highest was 20, right? So the retail investors are, okay, mom and pop investors outside there, right? Wow, okay, then they say it dropped from 20, wow, 20 dropped to 10, so then they see, wow, drop 50% already, time to buy. It's cheap, wow, 50% discount. I won't drop any further. If drop any again, maybe 20%, I will still continue to buy. Eventually, they forget that this is not Hata's valuation. It's because of hype. A lot of people are chasing, pushing up the price. They are not supposed to be this high. So whenever, okay, the correction happens, that's when 10 drop to, at that time, we still remember from 2 to 3. That's when a lot of people lose money. So drop a lot, okay, without knowing the valuation, price will still continue to drop. If you still remember, okay, you say stock price will follow fundamentals, right? Stock price will also, not to say going up, it will go down also. You go up too high, the fundamental is here, it will go down also. Understand that. That's why valuation is so important. Okay. So the next thing, okay, once you see valuation, so why need to buy undervalued stocks? Okay, number one, if you buy a stock at a low price, that means the market has low expectations of it already. Some slight surprise, then the price will go up. Then when you buy low price, right, there's less volatility. Why? Because like I said, if you still remember, if you buy it very high, right, okay, like for example here, this Talega, actually a lot of the price here is all supported by air. So any decline in the business, for example, is something like that, it will continue to go down because there's no fundamentals to support it. Yeah, so that's just very, very volatile. So the moment you buy, okay, you focus on a very good business, you buy undervalued, the fundamentals will be the very strong support, okay, for the price. Okay, so when you buy low price, it's easier for the company to exit expectations. Yeah, and low price, undervalued, you will have a stronger fundamental support. The fundamentals are the ones supporting the price, not air, not hype, not the multiple. Understand that? Okay. Now, so at the end of the day, you want to be a contrarian investor, you need to understand the company very well. Okay, because in the stock market, there's no such thing as shortcut and stuff. You must really understand, you must put in the work. Yeah, that's then and only then you are willing to act differently than other people. Otherwise, the only information you have is the stock price. Stock price go down, majority see only information is the stock price. They see, they're fearful, they see losses, increasing losses, they sell, they be fearful. Okay, so you want to be greedy. Okay, you dare to hold. Okay, you dare to enter. The only way to solve this is to understand the company very well and how to limit the losses to pick the right entry is to know the valuation. Okay, so but I do know this. Okay, understanding the company is also one of the hardest part to do. Okay, as a stock investor. Okay, and a lot of people because of this they neglected this work. Okay, and they rely on the stock price movement. Okay, as their source of information. So when I tell you my experience, right, if you realize stock price, right, you will get manipulated. Okay, by the stock market one, or better word is you will definitely get played by the funds one. You play the stock price. Okay, you see, wow, fly high, you happy. Then suddenly drop, or you get fearful, you sell it at a loss. Have you ever like experienced before? The moment you sell, the stock price continue flying up already, right? You all definitely went through this before, right? Yeah. Okay. So this is our strategy right now for you guys. Okay. So step number one, at this market crash right now, do focus, okay, on the good companies, the good growing ones, and most importantly, undervalued. So you want to focus is undervalued price and good company, then only you make money. Don't buy undervalued and bad businesses or the declining companies. Okay, that's when you also lose money. Okay, many mistakes done by investors. Is they thought, wow, I buy at this price drop, they average now. But they average now for the sake of averaging down because they want to, the idea is they want to lower the cost price. When it becomes lower, it recovers, I will sell it off. Sounds logic, right? Or I think it's quite familiar. You heard this strategy before, right? But no, most people they buy more of a declining business, and then the price never recovered. It keep on going down, right? So don't do that, and that's why the idea of knowing good company is very very important. That is the anchor point. Okay, that's the most important factor for the price to recover in the future. Okay, now like that. Okay, this is the clear image, right? Like, but you want to buy damaged stocks, this one going down, but the business continue to go up. This will be the support of your share price in the future and will give you confidence that the share price will recover soon. Don't buy this. A lot of people buy that. Revenue go down also, they go and buy continue. No wonder you lose money. Okay, so don't, especially at this market price drop one. Good or bad companies will drop at the same time. But the difference is, can you identify the good ones to enter more? Okay, now, so step number 2, accumulate slowly over time. Now, you see, and that's why valuation comes into the picture, right? When you know the valuation, then at least you know you are buying at the lower side, right? And you limit your losses. So you see, why we need to accumulate slowly instead of going all in straight? Because we know the stock is cheap. Yes, I know it's cheap already, but we cannot predict how low it will go. Okay, so instead of trying to time the bottom, we buy at a price that is already undervalued. Okay, so again, don't time the market. I know a lot of us want to time the most bottom one. I tell you, it's impossible. Know this: cheap is enough. There's no need to be the cheapest. Okay, all right. Next, stay number 3. Stay vested in the market. Stay vested. Okay, now you see, the reason why the moment you slowly buy, okay, the good stocks, undervalued ones ready, you stay vested, right? Okay, why is that? Okay, you will definitely hear that. Why not? I sell now. Okay, sell now, then in the future, then I come back. Okay, when the market want to recover, then I enter back already, right? It sounds simple in theory, but in reality, at that moment when you invest, very, very difficult to execute. Right? Okay, you see, we may not know when the market will recover. You will never know one. Okay, but staying vested ensures we ride the next recovery. You see, yes, you may sell now. It sounds good. Wow, then you were very happy. You see the market continue to go down, right? Okay, then okay, I will enter that next time. So my question to you, the first question is, so okay, now that you sell already, okay, the first question, when do you sell? Okay, let's say you sell at the right price. Okay, good. Wow, hey, I sell first. Okay, then it continue going down. Then my next question to you is, so when do you enter that? Because your first initial sell-off is you don't want to suffer the losses, right? That's what makes you fearful. You don't want to suffer the losses. So my next question to you is, okay, fine. So now the market is dropping right now. Tell me, when do you enter that? And secondly, how do you enter? Which stocks do you buy? Very difficult. You say you want to wait for the sign the market to go up. Very hard one. The moment, let's say the market go up like that, let's say one night, they go up, suddenly there's a 5% go up. Your emotion will stop you. Should I buy right now? This 5% go up, let's say in one night, or even 10%, is this the recovery? Ask yourself this question. Is this the recovery time? Or should I wait? Is this the fake one? Then you have a lot of decision to make. You cannot. All right. So that's why staying invested ensures we ride the next recovery. Okay. People who exit the stock market to avoid losses, I tell you, are more likely the favorites to miss the next rally because they are not vested ready. The moment it recovers, I tell you, by the time they say they want to enter, you know what's going in their mind? Number one, if it goes up, the first one they say, maybe they will tell you, no, this is a fake bounce. Why? Because there are still very negative news all around. Okay, I cannot see any positive news still. Okay, how I dare to enter? You cannot, because the moment you sell previously is because you have been fearful, right? So when the price continue to go up at the time, right? Okay, then, okay, you think that it may be a fake rally. Okay, then you don't want to enter. Then it continue to go up higher. Then something will creep into your mind, okay, and tell you, okay, perhaps this is the real rally already. Okay, should I enter back? Then your next thing is to tell yourself, I will wait when the market drop back again to my previous price. Then that time I will enter. You see why? Because they say, when it go up, expensive already. Then there's a anchor bias. Last time from 8 go to 10. Okay, then the 10 go to 15. I could have bought at 10 last time. Okay, then there's this kind of mind thing come to your mind. I wait from 15 drop to 10, I will definitely enter one. But when the time from 8 to 10, that time why you don't want to enter? Is it? I hope you get my logic. Whenever you go in and go out, timing the market, these are the things that will go through your mind. Very, very difficult. Yeah. So that's why I say at the end of the day, to make things simple, make sure you don't miss out the rally, stay invested in the market. People who exit the stock market to avoid losses are more likely the favorites to miss the next rally. Okay. And step number 4, you need to follow up with the company. Continue to follow up. Okay, buying is only the 10% of the work. To hold it through the volatility to ensure that you can, to enjoy the next up rally, right? To keep this one, you need to build the conviction to hold. Otherwise, all the bad negative news, the price keep on dropping, it will affect you mentally and emotionally. Yeah, so you need to follow up with the company, build conviction, avoid market noise, and focus on what matters, and that is the business. All right, and then step number 5, just be patient. Be patient and wait it out. Okay, patience is the hardest skill to master as a stock investor. Okay, you must be patient. Wait for 6 months, wait for 1 year. All right, because for example, Palantir at that time, okay, it was a star stock for our community at that time. But to able to enjoy that 500%, a lot of our members, including me myself, okay, there's a 500 to 800% return from this stock, right? Okay, it's not easy. People want this one, the drop. But are you willing to endure the drop for this long? From let's say 2021 here, from the price of 20, I remember, dropped to $7 to $8. And it was flat for almost 1.5 years. Can you endure that? Can you endure that? And let's say the price was 20, dropped to, it was like 70% drop. If you average down, okay, and let's say even if it's $15, 15 drop to 7, it's still a 50% drop, Can you manage to endure that? Can you do that? The only way is you understand the company, you know the company keep on going up. That's when it will give you the conviction. Remember the conviction here. So by the time the market realizes that mistake, then when your patient will reward you. That's when they want to fly up, start to fly up already. That's when a lot of patients they bought, and withstand it for 1 year and one and a half years, right, will be rewarded finally. Okay, this is Palantir. Okay, so you can see that here, and the price all drop here like that, right? But what we saw is the business continue to keep on going up. When we see this, we are happy. But if you see the price, you will get very stressful. Understand that or not? Yeah. Service now also same thing here, drop like that. Okay, but what we saw is the business, continue going up, no issue, that's when you will give you confidence to buy more. It spike drop. I know they dropped for 1 year, from December 2021 to December 2022. This drop. Okay, 1 whole year keep on dropping down. I tell you, it will affect you mentally one. Yeah. So the only way for you is to focus on the business here. Going up, doing very well, getting new customers. Okay, no problem. I continue to slowly average down, slowly buy. Okay, and that's when sooner or later, price will follow fundamentals. Like that, it will follow. It will match the fundamental. That's how it works in real life. Okay, so the only way, like I said, to have patience is to follow up on the development of your company. Business go up, stock price go down, and that's when you will get excited instead of being very depressed, instead of being very fearful. Yeah. So like I said, okay, buying is only like 20% of the picture. Okay, but you want to hold it, buy more, okay, or even make decisions to sell a declining company is 80% of the work. You need to keep track and monitor your company's development. All right. So stock investing is actually very simple, especially in this market crash. Focus on the good companies. Okay, select the good ones or see which one in your portfolio right now is a good one. Then only buy more when it is undervalued. And I believe right now with the market crash already, a lot are undervalued already. And then hold long term. Just wait it out. Yeah, very, very simple. Okay. But execution is not easy. Okay, execution is not easy. Yeah. So this is the overview of our whole strategy here. First, accept that there's stock volatility. You need to accept that it's a feature. Then you need to be greedy when others are fearful. And you can only do that if you understand the company and you understand the idea that the stock price will follow fundamentals. And since it will follow fundamentals, you need to understand the company. And when to buy more is you need to know the valuation. And the next thing is to stay vested in the market. And how to stay vested in the market and to make right decisions along the way is to follow up with the company. Continue to follow up. And lastly, how to let the stock price follow fundamentals over the long term is just to be patient. We do not know when the market will just suddenly from negative to become positive sentiment. We do not know when. The only way is just to be patient and wait it out. That's all. Okay, so this overview of our strategy of how to handle this market drop right now. Okay, so I would like to give you guys, one of my last message to you guys. Do remember, conviction isn't proven when share price goes up. It's proven when it crashes. All right. So most investors only want to know what happened when stock price drop. That's why they react with fear rather than greed. People like us, and the BI community, we are excited. The moment price drop, we know what happened already with our companies. Okay, we already know that this drop here is not justified, and that's why we know it's undervalued, and that's why we have the conviction to buy more. Yeah. So investors who understand and follow up with their stocks are the ones who can identify opportunities where others sees only risk. Okay, so I hope this here will help you on how to navigate this market. The key here is if you are an investor who understands your stock, you know which one are the good stocks. Then yes, continue to just follow whatever that I've showed you guys here. Okay,